Good evening, students. Welcome to the session. Have you revised the assessment proceedings? Do you have any questions around the same with regard to the assessment proceedings class? Yes, students. Any questions, any doubts with respect to the same? Yes. Good evening, Sanjay. Yes. Any questions? So I'll just quickly recap so that we can then start with the appeals topic in the today's class. Appeal, dispute resolution, all of that. We are going to continue from there. So students, how did we start? We discussed about 139 requirements for an individual when he is required, when he has a total income more than the basic exemption limit. And then we saw in case even if he does not have the total income more than the basic exemption limit, if he is a beneficial owner or is a beneficiary of a foreign asset for financial interest outside India in any entity incorporated outside India, bank account, right? Then we saw for firm, for company, they are mandatorily required to file the return of income. Then we saw that even in the case of charitable trust or political parties, if they have total income without considering the section 11, section 12 exemption or section 13A exemption for political party, if it exceeds basic exemption limit, their due dates are 31st October because they are required to get their books audited. And for the research association reads in which they are mandatorily required to file the return of income. Even for individual, you will consider total income without the 54 exemptions and chapter 60 exemptions, right? The limit for claiming exemption Mansha under 1023C is 5 crore. It is in yesterday I didn't get your question. Was it 1 crore? I didn't get the question, Mansha. In case you can describe, it's all right. Even if you're asking the charitable trust question, that is fine. But I'm not getting the question exactly. What are you asking about? Good evening, Namrata. So then we saw, then the return gets processed under 143.1, right? That's a summary assessment wherein the intimation is sent. Any arithmetical errors, incorrect claim of the loss, chapter 6A deductions after the return is filed, right? Under the 139.1 if it is claimed, or any kind of expenses which are disallowed or income which is added in the TAR but not taken into account in the ITR, all those are the computerized disallowances will be made. So it's just a computerized accuracy which is checked of your return of income and the intimation is sent, to which you have to respond within 30 days. And then the final intimation is sent to you. Even in the case of loss also, the intimation has to be sent. Only when there is no income, only when there is, no tax due, no refund due, no loss situation, then the acknowledgement of return of income is considered as the intimation itself, right? And the intimation has to be sent within the 9 months from the end of the financial year in which the return is filed. The processing of the return under 143.1 is mandatory even if the assessment notice has issued under 143.2, right? So in that particular case, the return of income, the return of income has to be processed mandatorily. Are we clear? Then the second thing is the then the e-verification scheme. The notices are sent to you under 133C in case they collect the information under the SFT which is not matching with your data which you have filled in the return of income. They can send you the notice under 133C asking you to verify this information. You can file the updated return in case you have missed out on something. Updated return can be filed within 24 months from the end of the financial year. This is different from the belated return. Belated return is till 31st December you can file the belated return or you can revise the return also. But this is something different, right? This is something different. You can file the updated return after 24 months. Here you can disclose additional income. But if it has the effect of reducing the tax or increasing the refund, you cannot file the updated return. Or if the assessment proceedings has started, search or survey has started, you cannot file the updated return. In case it's a loss return, if you're converting the loss to the income, you can file the updated return and you have to file updated return for all those years which has the effect of changing the losses, right? Then the updated return, if you file within 12 months, then 25% additional tax of plus interest you will have to pay. And in case you file after that, then 50% of the tax and interest you have to pay as the additional tax, right? In case there's no tax due, you don't need to pay any additional tax, right? Then you have, if you file the late return, you also have the fee under 234F, which is 1,000 if the total income is less than 5 lakh, and then 5,000 rupees is the 234F if it is more than that. Then we saw the assessment starts with the show cause notice under 143.2, which has to be issued within 3 months from the end of the financial year in which return is filed. If no return is filed, the notice will be issued to you under 142.1, asking you to file the return of income. 143.2 can be issued if there is understatement of income, excessive losses computed, or the taxes are underpaid, right? And then the AO also has the power to ask you to get the special audit done from a chartered accountant impaneled by the income tax department under 142.2A. And they can have the power under the 142.2A to also ask you to get the valuation done of the inventory from the cost accountant. They can also make a reference to the valuation officer to estimate the market value of any property or any asset. In case you fail to comply with the same, there will be penalty, prosecution, plus there could be the best judgment assessment being done under 144. What is best judgment assessment? Based on the material available, they will make the assessment on the ex parte manner. They will issue you a show cause notice as to why the best judgment assessment should not be made on you in case you do not reply, and then they will, based on the material available, they will carry out the assessment, right? Also under, if they have to call for any information, they can call under 142.1, 142.2, and if they have to ask any documents, books of accounts, they will issue a notice under 142.1. Again, there is no time limit for 142.1, 142.2 notices. Basically, till the time assessment is there, they can issue these notices any point of time. The assessments have to be completed under 143.3 within 12 months. Within 12 months, the assessment needs to be completed from the end of the relevant assessment year, right? So 12 months from the end of the relevant assessment year, the assessment will get completed. Then if something is then in the case, if the assessment is completed based on that, the notice of demand will be issued. The notice of the demand will be issued under 156, right? Then in case something is missed out in the assessment, the reassessment can be done. Or if the assessment has not been made, then the reassessment can be made. The reassessment can be made under section 147. The reassessment can be made under 147 if any income chargeable to tax has escaped assessment. Now the AO can assess the income or reassess the income or recompute the loss, and he can also reassess any other income which comes to his notice subsequently in the course of the proceeding. So not only the issue on which he has issued the notice under 148, but any other issue which comes to his notice subsequently, on that also he can assess or reassess the income. So for that, he has to have the information. What information? Information in accordance with the risk management strategy based on the audit objection, based on the survey, based on the information collected under 133, 133B, 133C, or information which requires actions in the consequence of any order of the tribunal. So in those, or the information received under DTAA. So except when the information is collected by the AO under 133, 133B, C, 134, the AO has to make an inquiry on that information, whether that is correct or not. And then he has to issue a show cause notice under 148A as to why the reassessment notice should not be issued to you under 148. Based on your reply, based on the material available to him, he will decide whether the reassessment should be made. And he will pass an order under 148A. Under 148A. Now, where the search is conducted, where the survey is conducted, in those cases, the AO will be deemed to have the information, which suggests that income chargeable to tax has escaped assessment. In such cases, 148A procedure need not be followed. For survey, you need to follow 148A procedure. Are we clear? Then you will have the notice to be issued under 148. What is the time limit for the notice under 148? The time limit is 3 years from the relevant assessment year, 10 years if the AO has in his possession books of accounts, documents, evidence revealing that income chargeable to tax is greater than, or any asset, income represented by any asset, expenditure or entry in books of accounts is likely to exceed 50 lakhs. Then it is 10 years. Then the specified authority is PCCIT, CCIT, PDGIT, DGIT, and in case of 3 years, the specified authority is PCIT, PDIT, CIT, or DIT. Why the specified authority is important? Because for 148A order, they need to take the approval from the specified authority. And in case the 148A is not there, for 148, they have to take the approval from the specified authority. Time limit, if the search case is there, if the search is initiated after 15th March and then there are less than 15 days which are left for the time limit to expire to issue the notice under 148, then the time limit shall be extended by 15 days. In this time limit, you will exclude the time taken by assessee to reply to the show cause notice under 148A. And if it is less than 7 days, the period shall be extended by 7 days. What is 148 notice? Notice to file a return of income. Are we clear? Then again, 143.2 notice will be issued, 142.1, 142, all of those notice will be issued to the assessee. And the assessment will be completed by issuing an order under 143.3, read with 147, the time limit of which is 12 months from the end of the financial year in which the notice under 148 is served. Are we clear? Then we saw that 151, 152, which is the 151 is the exception to time limit under 149, which is to give effect to the order of the court. But 150 subsection 2 says that the 150 subsection 1 cannot be invoked if the time limit has already expired on the date of issue of the order. Are we clear? Then we saw the search cases. In the search cases, we saw where based on the information, if the authorization officer has the reason to believe, the reason to believe is prerequisite for search. However, it may not be disclosed to anybody, including the ICAI, that the person to whom summons are issued under 131 or the notice is issued under 142.1 to produce books of accounts will fail to do so, or the person is in possession of any valuable article or thing, money, bullion, jewelry, which is representing the undisclosed income. So they can enter, search any building, any premises, even if that is not within its jurisdiction. If they have reason to suspect that the books of accounts or money, bullion, valuable article is kept in some other place, then after obtaining the approval from the higher authorities, they can search any other place. They can search any person also with reference to books of accounts. They can inspect, they can make the markings, they can seize the books of accounts. However, if the books of accounts cannot be seized, they can place an order of restraint, but they cannot place an order of deemed seizure for maximum 60 days. Then in respect of money, bullion, jewelry, valuable article, they can again seize that. However, if it's a stock in trade, it cannot be seized. They can just make a note of the inventory. If it's a valuable article, they can make the deemed seizure order, right? But if it is money, bullion, jewelry, then for those cases, they can just make the order of restraint for maximum 60 days. They cannot make the order of deemed seizure. They can examine any person on the oath, and there is a rebuttable presumption which is created that the books of accounts documents belong to this assessee, the contents of books of accounts are true, the signature is of that person. They can make the provisional attachment of the property after obtaining the higher approval of the higher authorities for maximum 6 months from the date of attachment order. In case of the asset seized, they will first apply towards the existing liability, which will not include advance taxes, and then the liability determined on the basis of the assessment or reassessment made pursuant to the search. And how the application will be made? First, the money will be applied, then the asset will be sold off, that will be applied, and whatever proceeds or assets are remaining, that will be given back to the person. In case the person makes an application for release of asset, they will first apply towards the existing liability, and then only they can release the asset after obtaining the approval from the higher authorities. But the application has to be made within 30 days by the person, and the nature and source of the acquisition of the asset is to be explained to the satisfaction of you. Now, this asset has to be released within 120 days. If it is released after, there will be 0.5% interest will be charged. After the search is completed, the assessment will be made under 147 only, because you have seen that under 148, the information collected under search is deemed information with the AO suggesting that income chargeable to taxes escape assessment. Of course, 148A procedure need not be followed. And in case there are pending assessments as on the date of search, the time limit for them will also be extended by another 12 months. Also, there will be penalty in the case of search, which is under 271 AAB. where the assessee explains the manner in which the income was derived, pays the taxes, discloses the income in the ITR, which is filed before the due date of 139(1) or before the time limit of 148 expires, then 30% penalty, otherwise it's 60% penalty, right? So any undisclosed income which is there, which has not been disclosed earlier based on some false entry or which is not recorded in the books of accounts. Then there is survey, power of survey we saw, the power to enter the place within the jurisdiction, not outside the jurisdiction. They can enter any place during the business hours. If it is a survey for EDS or TCS verification, they can enter after sunrise, before sunset. Any other place which is there where the charitable activity is done, or where any books of accounts are kept, which is not a place of business but place where the books of accounts are kept. This may not be a principal place of business. This can be any place where even if no business activity or charitable activity is carried out. So in that place after sunrise, before sunset. Now that is the time limit for entering. But the survey can be carried out even after the time limit, after the sunset also, or after the business hours also. Now they can inspect the books of accounts. They can retain the custody of the books of account for maximum 15 days. After 15 days, they need to take the approval from higher authority. They can verify cash, stock, valuable article, take the statements of any person, collect any information with respect to any event which has been conducted, if the expenditure for that event was very high. So they can collect all that information. So this is a very, very limited power. What other powers the income tax authorities have? The power of the civil code under 131 to examine any person on oath, to issue the summons, to compel the production of books of accounts. Then they have powers under 133 to collect any information, asking some ledgers and all, right? Then they have another power under 133 C, which is basically power to verify the information. They have power to retain or impound the books of accounts. They have power to collect information by going to a particular place of business during the business hours. And they have power to even examine the register of the company. Clear? So this is the summary of the entire assessment proceedings. Good evening, Manish. Yes, Shankara, even after giving the response under e-campaign, the assessment will get start. Yes, because there is an opportunity to you to explain. Now, if the income tax officer is not satisfied, Shankara, he will issue you a notice under 143(2) or most likely under 148. Good evening, Viraj. Mansha, no, the limit is not 1 crore. It is 5 crores. The limit is 5 crores, Mansha. The limit under 1023C for the hospitals or for the educational institutions which are solely for educational purpose, the limit is there is rupees 5 crores and not 1 crore, Mansha. Yes? Any other questions? NRI, yes, yes, Mansha, very good. So you're reading the newspapers, very nice. There was Economic Times article yesterday that lot of NRIs are receiving the notice. I can just show you the article. I just saved it on my LinkedIn yesterday. I'll just share you that article. See, this is very important. This is the benefit that, once you do anything in the class and when you start reading the financial newspaper, student, it will really help you. Just don't do anything else also. Like when you go to any financial newspaper, there are the tax queries which are asked. You can just go there and read that particular queries as well. You will understand now most of the things. See, it's article which was, I'll just share across. See, NRI is asked to state number of days spent in India. So these are the kind of notices which are being issued. So now the recently last 1 or 2 days back, the NRIs are issued the notices to give the sworn statements, basically on the exact number of days spent in India. Now, students, one thing, you tell me under which section these notices would have been issued to give the sworn statements. Yes, students. So the NRIs are asked to give the affidavits, signed affidavits, or give the sworn statements that how many days they have spent in India. Yes, so under which section they would have been issued these notices? Yes, students, you have studied everything. Now you tell me. Yes, students. No, it's not 142.3, Namrata. No. Under 142, they can ask you to submit the documents or any information that they require. And the notice can only be issued once the assessment proceedings have started. Yes. Anybody? Yes, students, it's very simple. Just now we discussed. Nobody? Under 131. Under 131 students, they would be issued these kind of notices. So income tax authorities have the power to issue, they have the power of the civil court, isn't it? I told you they have the power of the civil court where they can ask enforcing the attendance of any person issuing the commission or summons and examining him on oath, discovery and inspection, compelling production of books of accounts. Or they have the power to call information under 133 even if no proceeding is pending, students. So under these sections, they can initiate these notices. So they are not given under 142. Are we clear, students? So this is how you should be reading even the newspapers so that you will have the kind of idea, oh, this is what we have learned in the class. Isn't it, students? Okay. Any other question that you have? No, 147, Mansham. 147 is for reassessment. The reassessment have not been made on them. Mansha, no reassessment has been made on them. It's just that they are asking them the affidavit. Affidavit is to be given on the stamp paper. What is affidavit? This is a written statement confirmed by an oath. I swear that I am saying this as this is what is the fact. I am taking a swear that is to be given on affidavit, a statement confirmed by oath, which can be used as an evidence. Now, if you give a false statement, then you will be penalized for that. Then you shall be penalized for that. Are we clear? So this is under 131 or 133. It's usually under 131 that they are getting these notices. One more example I can show you of 131. I recently was going through this notice under 131. I'll show you 1 second. Give me. But in case you have any questions, you can ask me till then. So see, under 131, in case you do not reply to 131 notice, power regarding discovery and production of evidence, there will be penalty of 10,000 for non-compliance. There shall be penalty of 10,000 for non-compliance. Okay, I'll show you one more 131 example that I have. See, let me just, I'll not show you the entire notice because that shall reveal the name of the client and the income tax officer. So I'm just putting a kind of screenshot over here so that you get an idea. This is how the notice looks. I'm enlarging the image. See. Whereas your attendance is required in connection with the proceedings under the Income Tax Act in your case. You are required to attend the office on so and so date to give evidence and or to produce either personally or through the authorized representative the books of accounts or documents specified below and not to depart until you receive my permission. If you fail to do so, the penalty will be 10,000. So this is the notice which is issued under 131 of the Income Tax Act, summons to assessee. Summons to assessee. And why these summons were issued? These summons were not issued to the assessee for his own assessment. So these summons were issued in connection with the search proceedings conducted on the creditor of this client. So this is the summons which are issued to my client. And why these summons were issued to my client? His assessment proceedings are not going on. Not for this year, not for any other year. Still 131 is issued to my client. So even if the proceedings are not pending, Income Tax Authority have power to issue 131, 133, 133B, C, all of that. Now the search proceedings were going on the creditor of my client. And it was observed that my client had made some purchases from him. So the summons were issued to my client to attend the income tax office and explain the nature of these transactions and give the invoices. Are we clear? Yes, students. Okay. How will the notices be sent? Either email or letter. It is through email. There are no letters now happening. Physical notices are no more sent. It is entirely through email or through your e-filing portal. Yes, Dilip. Affidavits mean you are giving an undertaking for the fact. You are sworning on your statement on the oath. Okay, students? Yes. So is this practically now understandable by you? Yes or no? Before we move to the appeal part, just give me a quick answer whether you are clear with this or not, students. Please give me the answer. Yes. Yes or no? Fast, students. Are we on the same page? Now you will understand the assessment proceedings even when you practically start doing it, because most of the time in the CA final you feel that, oh, this is so boring topic, ma'am. How do we remember section? How do we remember what are the points? It's not that difficult. Once you try to get, this is how practically it will happen. It will be very easier for you to understand. And that's why how much ever I could want, to make it practical, I tried to make it. I tried my best, level best to make it practical in every sense for you, right? To give you a lot of examples. So let's move further. Let's start with the appeals topic. So you can just write down a new topic you can name appeals and revisions. Okay. So let's start. Now I have, okay, we had also discussed in the last class the faceless assessment. I had discussed about that. Now everything is going to happen through the NFAC, which is basically going to be an intermediary faceless appeal center. It's not AO, it's nobody. It's just a faceless center between the assessee and the assessment unit. There will be random allocation of assessment to any AO, and the assessment unit will issue the notices through the NFAC to the assessee, and assessee will give the responses to NFAC, which will be forwarded to the assessment unit. Only thing which is different is that before the passing of the order under 143.3, in case there are no additions which are There in the assessment, then the income or loss determination proposal is prepared, based on which the assessment draft assessment order and then final assessment order will be prepared. And in case there are variations prejudicial to the assessee are there, then the show cause notice is issued. Based on the show cause notice is issued to the assessee as to why these additions should not be made. Before the final order is passed, the show cause notice is issued to the assessee as to why the additions should not be made, right? Why the additions should not be made. And then based on that, the assessee has to reply. And then considering the reply of the assessee, the income or loss determination proposal will be prepared, and based on that, the assessment order, draft assessment order will be made. Okay, so NFAC, AU will issue the show cause notice, assessee will respond to that, and then the AU will prepare the income or loss determination proposal, and then the draft assessment order will be prepared, which will be shared to NFAC, and then the final assessment order is made. Fine. Now from this stage, you have an option as to what you can do if you're not satisfied with the order of the assessing officer. Yes, Mansha, I'm taking the 154 rectification. Do not worry about that. Mansha, what is this Delhi High Court judgment that 10-year period for IT assessment to income over 50 lakh? I didn't get your question. Okay. So now, once I have the order under 143.3, either based on the reassessment or based on the assessment, normal assessment, I have multiple options that I can choose from. Now, what are the options that I can select? What are the options that I can select? First is based on the assessment order under 143.3. Just write down. The first option that I get is the rectification under 154. The first thing you can do is a rectification under section 154. The second thing I can do is revision under 264. The revision under section 264. Third option which I have is appeal to the CIT appeal. Appeal to the CIT appeal under section 246A. Under section 246A. I also have an option to go to the Dispute Resolution Committee, DRC, and Dispute Resolution Panel under section 144C. So these are the options that you get when the assessment order under 143.3 is passed. First, we are going to talk about the rectification. Yes, Mansha, that is very much right that the 10-year period will only be applicable when the income escaped is more than 50 lakhs. Below 50 lakhs, there will be 3-year limit. So that's what even we discussed. That's a clear principle under law also, that the 3 years time limit will be applicable if the income does not exceed 50 lakh. If it is income represented in the form of any asset, entry in the books of accounts, or any books of entry which is appearing, or the books of accounts documents which demonstrate that the income chargeable to tax is exceeding rupees 50 lakh, in those cases only the 10-year time limit will be applicable. So if you remember, we have already written over here also. I'll just display it over here. If you see, where the income is represented in the form of any asset, expenditure or entry in books of accounts exceeding rupees 50 lakh, then the time limit is 10 years. Okay. So first we are now going to talk about the 154 assessment. Okay. Now 154. How this assessment is made. Let's try, 154 rectification. What is that? So 154 rectification which is there. Now in the case of 154 rectification, this is a rectification which is based on the mistake apparent from the record. Based on the mistake which is apparent from record. Under 154, the rectification application is made to the assessing officer itself. This is not to any appellate authority. This is made to the assessing officer only. So where there is any mistake which is apparent from record. Now you will ask, ma'am, what is the mistake which is apparent from record? What is the mistake which is apparent from record? So mistake apparent from record is that it's a very grave, which is a patent error which is lying on the face of the order. So let's say, for example, that I have received the assessment order under 143.3. Under 143.3, you receive the assessment order, and let's say the interest under 234A is computed wrongly. Or let's say, for example, some disallowance has been made wrongly. Or let's say, for example, I have not been given the carry forward of the, I have not been given the set off of the brought forward losses. This is a very mistake apparent from record. You don't need to look into the order. There is no interpretation mistake, nothing like that. Or let's say, for example, the AOS forgot to give me chapter 6A deductions. That is the mistake apparent from record. So if there is any mistake apparent from record, I will not go for appeal. I will just make an application to the AO. Then please correct this particular mistake. So amend the order passed under the 143.3. So application can be made under 154 to the assessing officer. Or if the assessing officer himself notices it, he can suo motu also change the assessment order based on the mistake apparent from record. Are we clear? So just write down. Here under 154, which orders can be rectified under 154? Assessment order under 143.3. The assessment order passed under 143.3. Intimation under 143.1. So even these intimation which is passed under 143.1, the processing of return, if there is any mistake, let's say for example, they have not given the TDS credit, they have not given any credit of the foreign taxes paid, there is mistake apparent from record. So you can make an application under 154.1. Or the intimation under section 200A or 206 CB. This is the TDS or TCS intimation. The TDS or TCS intimation which will compute any TDS which has been payable by you, which you have not deducted or which you should have deducted and you have not deposited based on the TDS return that you have filed. So these can be rectified under 154 upon the existence of if there exists mistake apparent from record. There exists mistake apparent from record. Are we clear? Now, mistake apparent from record cannot be, or this means, what does the mistake apparent from record means? Any apparent error or error appearing or any blatant or error appearing on face of order, which is not found from the dig of the order, or which is not found by digging the order in detail. So it's a very glaring, obvious or self-evident mistake. Mistake which has to be discovered by reading the order or examination of order is not a mistake apparent from record. So a change of opinion is not mistake apparent from record. Is not mistake apparent from record. Clear? But the Act says any application of the decision of Supreme Court or any retrospective amendment of law can also result in the rectification under 154. Retrospective amendment in the law means that if, let's say, for example, today some expense is allowed and tomorrow the amendment is being introduced by retrospective amendment. Let's say, for example, the freebies given to the doctors by the pharmaceutical company. There were difference of opinion initially. Then the Supreme Court said that the freebies given by the pharmaceutical company to doctor is not an allowable expense. It is something which is in the violation of the law. So therefore, this is not an allowable expense under 37. Now, this was amended. This was the Supreme Court decision. So to apply this decision in my case, the AO can suo motu carry out the rectification of the assessment order under 154, as this would constitute the mistake apparent from the record. So, subsequent decision of Supreme Court or retrospective amendment of law. So the explanation was also introduced retrospectively under section 37 to say that any freebies given by the pharmaceutical companies to doctor is not an allowable expense. So basically any expenditure which is in the violation of the law will not be an allowable expense. So basically that is again retrospective amendment. So these can be considered as mistakes apparent from record. This can be considered as mistake apparent from record. And the rectification can be made for that. Now, what is the time limit for the rectification under 154? The time limit is in case application is made by assessee, in case the application is made by the assessee then in that particular case, the action will be taken by the AO. The application can be made by the assessee within 6 months from the end of the month in which the application is received. The AO has to rectify the order. Are we clear? So the amendment can be made suo motu by the AO also, and the application can be made by the assessee as well. Application can be made by assessee as well to rectify the mistake apparent from report. Are we clear? Now, in case the amendment is made to the assessment order, and because of which there is, let's say, enhancement of the tax or reduction of the refund, then the AO has to give a notice to the assessee before making the additions, before making the enhancement to the total income or reduction of the refund. So it has to give a notice to the assessee to provide him the opportunity of being heard. Are we clear? Are we clear? Yes or no? And based on that, the notice of demand or based on that, the refund due will be decided. Okay. So the AO will serve the notice of demand also if the tax has increased or the refund has reduced. So of course, when the tax has increased, only then the notice of demand will be given, specifying that this is the sum which is due. But what is the time limit for rectification? When the application is received from the assessee, it is 6 months. 6 months from the month in which the application is received. 6 months from receipt of application. And where it is suo motu by the AO, then the time limit is 4 years from the financial year in which the order is passed. Okay, so if you can write down, if the tax is enhanced, notice of demand under section 156 will be issued after providing opportunity of being heard to assessee. Yes or no? Yes or no, students? Any questions with respect to rectification? Delete change of opinion is not a mistake apparent from record. If say my opinion is this expenditure should have been allowed, AO's opinion is this expenditure should not have been allowed, for that you need to go to appeal. For that, it's not a mistake apparent from record. Time limit for assessee making the application. The assessee can make an application at any time, but it has to be passed by. There is no time limit for assessee to make an application. Yes, the opportunity of being heard to be given, as I have written over here, Mansha, before making any enhancement to the tax or reduction in the refund. If the person is not registered on the income tax portal, Shankara, then how will we know that the notices are issued to him? The notices will be sent to him on email, Shankara. Rectification under 154 can be by the AO. Can be by the AO, delete. Rectification under 154 has to be by the assessing officer, the one who has passed the order. Yes, any other questions? Mistake apparent from record, Namrata, as I said, let's say for example, the chapter 6A deduction effect has not been given. The claim of the brought forward losses has not been considered. So that is something which is a mistake apparent from record. And this can be rectified by the assessing officer. All the assessing, not only the assessing officer, in fact, but even the Principal Director General, Principal Chief Commissioner of Income Tax. This is applicable to all the orders of the income tax which are passed. Whether it's not only the assessment order, basically the 154 says, the 154 if you read, not only says about the assessment order under 143.3, it is order passed under the provisions of this act. So it can be any order. So you can just write it over here, assessment order or any order passed under the act. But since I was dealing here with the assessment order specifically, I was concerning only up to that. But this can be any order. Okay? Yes or no, students? 154, is it clear? Any questions? Any doubt? So the first application can be made under 154. Yes? Yes or no, students? Any questions? Any doubt? Now the rectification can not only be limited, as I said, to 143.3 order. Rectification can also be made, let's say for example, there is disallowance of the remuneration in the hands of the firm. Let's say the firm has given the remuneration to the partners and it is over and above the limits which are prescribed under 40B. You remember we had the limits under section 40B in the case of the remuneration to be given to the partners, which will be allowed in the hands of the firm as the deduction. So under 40B, if you remember, the limit was given, which was on the first 3 lakh or in the case of loss, 1,50,000 or 90% of book profit, whichever is higher. Sorry. On the balance book profit, 60%. Right? Do you remember that? And there was also a provision under section 28(5)(a), which said that in case the remuneration is disallowed to the firm, under 28(5), there was a provision, there was a proviso which said if the remuneration or interest is not allowed to the firm under 40B, if it is paid in excess of the limits under 40B, then that shall not be considered as the income of the partner. Because otherwise, remuneration interest is the income of partner under 28(5). But the proviso to 28(5) said that in case the remuneration is disallowed to the firm, that will not be again considered as the income of the partner under 28(5). So let's say, for example, if the remuneration is disallowed to the firm, so how we will not consider it as the income of the partner? Let's say the assessment of partner is pending, but the assessment of firm has already happened. Or let's say the assessment of the partner has also happened. Assessment of firm has happened later. So then the rectification order will be passed for the assessment of the partners by rectifying that particular remuneration by not considering as the income of the partner. Similar can happen in the case of the AOP also, where there are certain disallowances made to the AOP. Now, AOP's income is also taxed in the hands of the member by giving them a rebate under 87A. If you remember, we had done that. Sorry, under 88. If you remember, we had done that. Under 167A, read with section 88, you consider the rebate of the AOP's income, right, based on the tax that you calculate on the AOP. So, in case there is disallowance in the hands of AOP, the rectification order will be passed in the hands of the AOP's member. Or let's say, for example, if there is losses which are disallowed in 1 year, or depreciation which is disallowed in 1 year, which will have the implication in the subsequent years when the losses are claimed. So rectification orders can be passed for all those years. Or let's say, for example, where let's say the capital gains was not chargeable under 47.4 or 47.5. 47.4, 47.5, ma'am, what was that? Transfer of a capital asset by a holding company to a wholly owned subsidiary. And if you remember, there were conditions that the wholly owned subsidiary should not be ceased to be a wholly owned subsidiary, and the capital asset should not be converted into stock in trade for 8 years period. If, let's say, for example, the capital asset is converted to stock in trade, or the wholly owned subsidiary ceases to be a wholly owned subsidiary and before the 8 years expiry, then the capital gain will be chargeable to tax under 47A. Are we clear? So then the rectification order will be passed if the assessment has already happened for that year. Now within 8 years you transferred that. If within 8 years you converted it into stock in trade, or within 8 years the subsidiary ceased to be a wholly owned subsidiary, then the rectification order will be given under 155. Are we clear? Yes or no? Or let's say, for example, where the credit for TDS or TCS is not given, maybe because that time the credit was not reflecting in your account. And later on, let's say the deductor has revised its TDS return. So then rectification order can be passed for that. Or let's say, for example, deduction under 10AA is there, which has not been allowed to you because you did not receive the amount in foreign exchange within the 6 months period which is given to you. And later on, let's say, for example, you have received the amount in the foreign exchange. So you need to receive the amount in India in the foreign exchange for the 10AA deduction on exports. So then the rectification order can be passed. Or let's say, for example, the foreign tax paid outside India. Let's say, for example, at that time you did not have the proof of the taxes paid. Maybe because of the difference in the years, it is possible that taxes may be paid later on. So you can make an application for the rectification. Let's say, for example, if there's a compulsory acquisition of land and the order is revised by the court, you dispute the compensation which is given to you. The compensation may be enhanced, the compensation may be reduced. In case the enhanced compensation is paid, you will have the capital gain in the year in which the enhanced compensation is received. But in case it is reduced, then the rectification order can be passed. Are we clear? Yes or no? Any questions? Any doubts, students? 6 months time limit is from the passing of the order by AO Delhi. No. 6 months time limit is for the AO to complete the rectification, which is 6 months from the date of application received from the assessee. Okay. I've written over here, right? 6 months from the receipt of the application from the assessee. Yes, students, rectification. Is this clear, students? Okay. Okay. Now we are moving to the next one, which is the revision. Revision under 264. Just write down. Let me make it. Okay. Revision under 264. 1 second, just give me a moment. Okay. So revision under 264. Just allow me one moment because I'm making some adjustments to this. I'm unable to make it. Otherwise, it will become very chaotic to write. Okay, now it looks decent enough. Okay, fine. So now revision under 264. Now revision under 264. When can the revision under 264 be done? Now for revision under 264, who can do it and when it can be done? These are the two questions that we need to understand. And how is it different from 154 rectification? Because you may feel that, ma'am, both of them appear to be same words, right? So in case any order which is passed by the AO is incorrect, okay, so the assessee can make an application to the principal chief commissioner. So here, application can be made to Principal Chief Commissioner of Income Tax or Chief Commissioner of Income Tax or Principal Commissioner of Income Tax or to the Commissioner of Income Tax. Right? To revise any order. To revise any order. Right? To revise any order under section 264. Now this application can also be taken up suo motu by the PCCIT, CCIT or CIT or PCIT. Now, what is the time limit under which this application needs to be made? Here, the application can be made within 1 year from the date of the order. Application to be made within 1 year from the date of the order. So the PCCIT or CCIT can revise the order within 1 year from the date of the order which is received. Are we clear? Now, if the application for the revision is made by the assessee, it must be made, the application has to be revised within, again, 1 year from the date on which the order in question was communicated to him. Now, the PCCIT or CCIT have also have the power to admit the application even after the expiry of 1 year if they are satisfied that the assessee was having some sufficient cause for making the delayed application. So they can condone the delay also. So the authorities can condone the delay, can condone the delay based on sufficient cause. Based on the sufficient cause, they can condone the delay. And they can also decide to not to interfere with the assessment order. Are we clear? They can decide even not to interfere with the assessment order. So under 264, the PCCIT, CCIT, PCIT or CIT is empowered to revise an order passed by the subordinate authority. It shall be obligatory for them to pass an order within 1 year from the end of the financial year in which the assessee has made the application. So assessee is the time limit to make 1 year. Assessee is the time limit to make the application within 1 year from the date of the order, and even they have an obligation to pass the revision order within 1 year from the date on which the application, from the year in which the application is filed by the assessee. So, revision order under 264 can be can be passed. Revision order under 264 to be passed within 1 year, from the financial year in which application is made. Financial year in which the application is made. Again, this is entirely done in a faceless manner. This is entirely done in the faceless manner. Are we clear? Yes or no? Any questions, any doubt till now? Yes? What are the grounds or situations whether I decide to go for revision or appeal as both cannot be used? Yes, we will talk about that, Dilly. Hold on for some time. HR receipt not submitted earlier, now assessee can file for rectification. No, you cannot file for rectification, Mancha. That is done. That is also we are going to discuss. Yes or no? Is this clear up till now? So revision is done under 264. Now, what is the difference between rectification and revision done under 264? Now, the revision which is there under 264, that is an alternate remedy to appeal. That is an alternate remedy to the appeal. Are you getting that particular point? So that is something which is separate from the appeal. So you can either go for appeal or you can go for revision. But the 154 rectification which is there, that is just a very, very limited, power which is given to the assessing officer to rectify its order if there is a mistake apparent from record. If there is a glaring mistake, very obvious mistake, for which you do not want to invest time in the appeal, because appeal is going to take a lot of time. The CIT appeals take more than 2 to 3 years time. So this is the way where you can just file an application and get it done within 6 months under 154. So 154 is for the cases where there are very small mistakes. Interest has been computed wrongly, or maybe the loss has not been given effect to. The carry forward of brought forward losses have not been set off. Tax credit, TDS credit has not been given. Very obvious mistakes. So then you can go for rectification under 154. But then if it is not a mistake apparent from record, if you think that the AO has not considered your claim rightly, then you have an option to go for either appeal or revision. Most of the time we go for appeal and not revision. Revision is a very, very limited exercise which one takes up. Because here, if you look at it, the application is made to the superior authorities for the order passed by the subordinate authority to revise any order passed by subordinate authority. Now, understand that the income tax officers only are going to revise the order, are going to review whether the order needs to be revised. So why would the income tax officer who was superior would agree to revise the order passed by the subordinate authority? You are making an application to the income tax officers only. But to the superior officers, that the order passed by the subordinate officer is incorrect. So please revise the order. And there are very less chances because the income tax authorities will always be pro-department. They will never be pro-assessee. Right? Is that correct? Because they would obviously be more in the favor of the department side. So they are not going to revise the order in assessee favor. Very, very limited chance that they would revise the order in your favor. Secondly, these orders under section 264 are final in nature. Are final in nature. So under 264, the orders which are passed, no appeal lies against that order. Are we getting that? So these are the final orders which are passed. There is no appeal which lies against the 264 order. So meaning if you go for 264, the matter gets over there. You can only go for then the writ petition to the High Court. There is no appeal to ICAI also. Are we clear? Yes or no? So just write down. No appeal lies against order under section 264. Yes. So this is the difference between the rectification, revision and appeal. Yes or no? Any questions, students, so far? Okay. Okay, so let's take a break of 10 minutes over here and then get back with the appeal because now if we start appeal, we'll not be able to take a break. So let's take a break of 10 minutes and then we'll start with the appeal. Let's take a break. ब्रेक स्टार्ट करें. अशोक जी. Yeah. Okay. Any questions, students? Revision under 264 can be done once. The leap you obviously cannot again and again put for the revision application. Yes, Mansha, that's why the assessee prefer appeal instead of revision. Okay. So now let's move on to the appeal. Okay. The appeal under 246A and the appeal under 246. Now we have the two appeals which are there or two appellate bodies which are there. Not the bodies, I can say appellate authority. The first level appellate authority which are there is the appeal before the Joint Commissioner appeals or the appeal before the CIT appeal. So you can write it over here like this. CIT appeal or the JCIT appeal. Okay, so fine. So appeal to the CIT or JCIT under 246A. Now, which orders are appealable under 246A or under 246? For JCIT, it is 246 and for CIT, it is 246A. Now, which orders can be appealed before the JCIT appeal or the CIT appeal? Now, why this is done? Initially, it was only CIT appeal. Now we have even the JCIT appeal, Joint Commissioner of Appeals. This is different from Principal Commissioner or Commissioner of Income Tax. The Commissioner of Income Tax is the Income Tax Authority, whereas a Commissioner Appeals is the first appellate authority. So JCIT and JCIT appeal, CIT and CIT appeal, both are different. Okay, so the assessee very aggrieved by the order, which is passed by the AO below the rank of Joint Commissioner. If you remember, I told you who is an AO. Who is the AO? If you remember, I told you who is the assessing officer. Who is the assessing officer? Yes or no, students? Who is the assessing officer? I told you that day also. So, if we go back to the assessment proceedings class, we discussed about who is the assessing officer. Let's look at it. So, the assessing officer is ACIT, DCIT, ADIT, DDIT. Now, the assessing officer, what they are saying is, who is below the rank of JCIT or below the rank of the Joint Commissioner. If you look at if you want to go for the Joint Commissioner appeals, or whether you want to go for CIT appeal, that option is not given to you. That they are deciding internally as to whether the case has to be referred to the JCIT appeal for the appeal or whether it has to be referred to the CIT appeal. That we are not going to decide. That they are going to decide internally. So income tax authorities, if you remember, I told you that it starts from Assistant Director of Income Tax or Assistant Commissioner of Income Tax. Then we have Deputy Commissioner of Income Tax. So any assessment order which is passed by ACIT or DCIT, because an assessing officer is defined, if you look at the definition of the assessing officer is defined. Assessing officer is defined in the section 2. And how is it defined in the section 2? So, an assessing officer means ACIT, DCIT, ADIT or DDIT. So any order which is passed by them, they will make a reference to the JCIT appeal. This is in order to ensure the speedy disposal of cases because, only when the CIT appeal was the authority, so it used to take so many years to get the appeal closed, to get the appeal order passed. So now they have given two authorities, CIT appeal, JCIT appeal. And they are saying under 246, first we are going to talk about appeal before JCIT appeal. Right? Appeal before the JCIT appeal. So, a order passed by the AO. Below the rank of JCIT. So, subordinate authorities' orders will go to JCIT, higher authorities' order will go to the CIT. Now, what are the orders covered over here? Intimation under section 143(1), where the assessee objects to the additions or adjustments made to the intimation. Assessment order under section 143(3). Assessment order under 143(3). Order under 144, which is in respect of the best judgment assessment. So, assessment order under section 144. Then, assessment order under 147. Reassessment. Then, intimation under 200. TDS intimation under section 200, where the deductor objects to the additions. Or under 206CB, which is for the TCS. These are TDS or TCS intimation. Or the order under section 201. Or 206C6A, which is deeming the deductor or the collector, TDS deductor or collector as assessee in default for not deducting or collecting the TDS or TCS. Penalty orders. Penalty orders and rectification order under 154 or 155. Are we clear? So this is in respect of the JCIT. If the order is passed by the Superior Income Tax Authority above the DCIT, above the Joint Commissioner level, then in that case you will go to CIT. You will not come to JCIT. You have to only file the appeal against the assessment order. You will not decide whether it will go to JCIT or whether it will go to CIT. That the Income Tax Department will decide. That the CBDT will decide. Which orders will go to CIT appeal, which orders will go to JCIT. So what they say is that the orders which are passed by the subordinate authority will go to JCIT appeals, and the orders which are passed by the authorities above the JCIT. Above the JCIT, meaning the superior authorities, or with the approval of the superior authorities, they will go to CIT. Are we clear? So you can just write it over here. If order passed by or with approval of income tax authority above DCIT, comma, appeal shall not lie before JCIT appeals. Are we clear? Now, CIT appeals under 246A. CIT appeals under 246A. Now we are going to study about that. So just write down over here. Appeal before CIT appeal under 246A. So first is which orders we are referring to? Order passed refusing to approve tonnage tax scheme. To approve tonnage tax scheme. Students, what was tonnage tax scheme? Yes, student. Delhi, yes, revision is not a quasi-judicial body. Appeal is a quasi-judicial body, or ICAI is a quasi-judicial body. Yes, you're right. Dilip, is there any monetary limit for JCIT or CIT appeal? No, there is no monetary limit, but that's a good question. So even when I was, reading today, I also had the similar doubt whether there's a monetary limit or not. But there is no monetary limit which is given. Yes, students, what was the tonnage tax scheme? What was it? The tonnage tax scheme. Yes, students. What was the tonnage tax scheme? Yes. Yes, students. Faster, what was tonnage tax scheme? Yes, tonnage tax scheme we had done in the class of the assessment of various entity student. At that time, I had explained you the tonnage tax scheme. Now you don't remember. Yes, faster. I can't see any answers. No, Dilip, it is not for the foreign companies. In fact, it is for the Indian companies. It was not for the foreign companies. Yes, Mansha, it's a shipping company provision. If you remember, we had spoken about the tonnage tax scheme, wherein this is the kind of scheme which is given to the Indian shipping companies or a foreign company having the place of effective management in India. So this was for them. Okay. So just write down order passed. So if the tonnage tax scheme is not approved, so then in that case, that order can be appealed against. Okay. So if the assessee wants to opt for the tonnage tax scheme, it has to select that particular scheme, right? It is not something which is automatically available. So in case the assessee wants to opt for that particular scheme, it has to exercise that particular option. So if that is rejected, that can be appealed before the CIT appeal. Now see, that is not available before the JCIT. So a qualifying company may opt for tonnage tax scheme by making an application to the Joint Commissioner. Now, since this is the application which is treated by the Joint Commissioner, which is higher than the Deputy Commissioner, so therefore the appeal does not lie before the JCIT appeal. The appeal will lie only to JCIT appeal if the order is passed by the Income Tax Authority below the level of Joint Commissioner. If it is by the Joint Commissioner or above, the appeal will not lie to the JCIT. So the JCIT on receipt of the application for the tonnage tax scheme will only after its satisfaction will pass an order approving or rejecting the scheme. It is not an automatic scheme. You have to make an application, and only when the JCIT approves it, you can go for the tonnage tax scheme. If he is not approving, you cannot go for the tonnage tax scheme. So in order refusing to approve the tonnage tax scheme, then the appeal will lie to the CIT appeals. Okay. Next is the order. The order passed by the order against the assessee where the assessee denies his liability to be assessed under this act. Where the assessee denies his liability to be assessed under this act. Now, question arises, student. In this case, we are discussing one case law. A question arises, students, that here they say that an order against the assessee, where the assessee denies his liability to be assessed under this act. So, a question was before the court in the context of the buyback tax. Buyback tax under 115Q. We have learned about the buyback tax under 115Q, students, isn't it? 115QA. Now the question before the Supreme Court was that in a case where the assessee is denying its liability to pay the buyback tax of 20% under 115QA, and can he appeal before the CIT appeal against the order which is passed under 115QA? So, question before the Supreme Court was that can the assessee appeal before the CIT denying its liability to pay the buyback tax under 115QA? The Supreme Court in the case of Genpet India Private Limited. India Private Limited interpreted this particular clause. It said that this particular clause which is there, which says that an order against the assessee where the assessee denies his liability to be assessed under this act is not talking about the assessment procedure, is not talking about the assessment under 143 or 144. This clause does not talks about the word assess does not talks about the assessment under 143 or 144, because for that we have a separate clause. The expression denies his liability to be assessed is quite comprehensive, which will take into account every situation under the Act in which the assessee denies his liability to be assessed under the Act. So, the Supreme Court held that the determination under the 115 QA for the buyback tax is not only about that whether the assessee is liable about the buyback tax, it is also about it is not only about the quantification of buyback tax, it is also about whether the assessee is at the first place liable about the buyback tax, liable under the buyback tax or not. So that particular determination of the question that whether the assessee is liable to buyback tax or not would fall under this particular clause. And therefore, the appeal will lie against the determination of liability under buyback tax. So, appeal against the determination of liability under section 115 QA buyback tax shall fall under this clause. Fine, students. Next, which is the other appealable order before the CITA? The assessment order passed under 143(3) or under 144. So, assessment order under 143. The assessment order 143(3), except the assessment order passed in pursuance of the directions of the dispute resolution panel. Except order passed in pursuance of directions of dispute resolution panel. Because if you are going for DRP, you cannot come for CIT appeals. If you are going for DRP, you cannot come for CIT appeal. If you are going for rectification, yes, you can still come for appeals. Because if you saw that, I told you the rectification order under 154 or 155 can be appealed before the JCIT appeal. So this can be appealed to the JCIT appeals. But if you're going for DRP, you cannot come to CIT appeal. So an assessment order passed in pursuance of the directions of DRP, you cannot come to CIT appeal. Or the assessment order passed by the AO with the approval of the PCIT or CIT, where the GAR is invoked. That is not appealable to CIT appeal. So if you remember in the assessment procedure class in the last lecture, we discussed about the invocation of the GAR. When the GAR is invoked, AO has to make a reference to the Principal Commissioner of Income Tax or Commissioner of Income Tax. Right? And the PCIT or CIT will then issue the notice to the assessee. And based on the assessee's response, it will make a reference to the approving panel. And the approving panel will inquire, call for documents, and issue the directions. And based on these directions, the AO will complete the assessment. So as I told you, no appeal will lie against the order or against the directions of the approving panel. So the AO will complete the assessment with the prior approval of PCIT or CIT for passing the assessment order. And on this also, no appeal before the CIT. Against this order, there is no appeal before the CIT. Are we clear? So in the appeals and revisions also, you can similarly write or assessment order where GAR is invoked. Where the GAR is invoked. Are we clear? Then here you can only appeal the assessment order under 143.3 or the assessment order under 147. Here, before the CIT appeal, the best judgment assessment will not be invoked. So the best judgment assessment will be before only the JCIT, not before the CIT appeal. So best judgment assessment order under 154, you can just strike it down. And you can write, this will go to the JCIT appeal. Okay. So the again assessment or reassessment order under 147 again can be appealed except the order passed in directions of DRP or where the GAR is invoked. Next is, which other order is appealable before the CITA? Is the order passed by the transfer pricing officer. Transfer pricing officer's order under section 92 CD. Transfer pricing officer's order under section 92 CD, where the arm's length price is determined as per the APA. Where ALP is determined as per APA. You will learn about APA in the transfer pricing classes. So we are not discussing as of now this much. Next is rectification order. Under 154 or 155. So this is appealable to JCITA or CITA both. Okay. So rectification order having the effect of enhancing the additions or reducing the refund. Or order refusing to allow the claim made by the assessee. Are we clear? Then the intimation under section again 200A or 206CB. Intimation of TDS or TCS. Intimation under section 143(1). Then the order under section 163 treating the assessee as agent of non-resident. This also you will learn in international tax class. Order made on the successor for the income of predecessor. Order on successor assessing income of predecessor. Then order treating deductor or collector as assessee in default. Okay, as the assessee in default. A refund order determining the refund under 237. Penalty order, then TDS penalty under 221. Are we clear? Or any refund order which is with respect to denying the TDS refund. So all of that will be appealable before the CIT appeals. Any doubts, students? Ma'am, when assessee files an appeal, whether he has to pay any part of disputed money to the authority or just the application fee, delete, we are going to talk about that. So when GAR is invoked, then from the assessee point of view, where he will appeal, what is the remedy from assessee point of view? Again, we are going to discuss that. Can rectification be appealed to JCIT? Yes, rectification Mansha can be appealed to JCIT. As I told you, 154, 155 rectification can be appealed before JCIT and CIT both. Clear? Okay. Now, how do you appeal before the JCIT appeal or the CIT appeal? So first of all, the appeal has to be filed in the specified form which is there for the appeal, which is form 35. So there is a form 35 under which there is a specific mechanism to make an appeal. You have to first write the statement of facts, list out the facts carefully. Understand, appeal drafting is an art. You have to be very specific with the facts that you're writing. Beware about the thing that you do not make the submissions in the fact. You should not take any grounds of appeal in the fact. There are two things: statement of facts and grounds of appeal. Both are different. In the statement of facts, just list the facts that this is the assessee, this is the status of the assessee, whether he's a resident, whether he's a non-resident, this is the previous year assessment here that we are agreed for. This is the assessment order which is passed by so and so authority under so and so section. The assessment order had made these and these additions. The assessment order was passed on so and so date. These are the additions we are agreed with. Now, what are your contentions? Why you are agreed with those additions? That you have to state in the grounds of appeal. So, form 35 with the statement of facts, which we call it as SOF, plus grounds of appeal, the GOA. Are you getting that particular point? So in the grounds of appeal, students, you will take your grounds. Again, you have to be very precise. You don't need to make submissions while filing the form 35, students. You don't have to explain and elaborate that this is the case law, this is the provision, that this is the section. Don't need to do that. So you have to be very precise in terms of how you make the grounds. You have to just list the grounds as brief as possible, students. But just list out that these are our grounds. And you have to be very definite while taking the grounds. List out as much grounds as you can. Now, how will you list the grounds? You will say that as per this section, this is allowable. But without prejudice to that, even if this is not allowed, we are making the alternate claim. So we write without prejudice to that. Are we getting that? So I can show you how we make so this all has to be done in the form 35 itself. The SOF and the grounds of appeal both are to be given in the form 35 itself. I can show you one of the case that we have, for which we have prepared the grounds of appeal and the statement of facts. So you get an idea. See, these are the statement of facts that I have listed out. Are you able to see this? The case was reopened under 147 with the reason to believe that the appellant had deposited cash in the saving bank account. The appellant was not in receipt of notice issued under 148. During the impugned previous year, the appellant was not employed, was not earning income, whatever his circumstances. These are the facts that I have written. So we have listed all the points of facts which are existing. I have not taken any ground. Appellant was not in receipt of notice under 148. Appellant was also not receipt of notice under 142. And directly the appellant received the order passed under 147, read with 144, read with section 144B. And he got to know about the assessment made on him. During the impugned year, the appellant was not employed, was not earning any income. And he was doing some stock market transaction to learn the basics of the stock market. And the AO decided to pass the assessment ex parte without granting the opportunity to the assessee. And then the AO has raised this and this tax demand. These are the additions which are made. And then you see if we have taken the grounds of appeal. That the unexplained money under section 69A of the Act, business income from the commodity transaction, short-term capital gains, penalty, all of that we have taken in the grounds of appeal. Now, these are the submissions which are made. Mind that. These are the submissions which are made. Now, if you look at the Form 35 which is filed, I'll show you the Form 35 also. See. So, these are the grounds of appeal which are there under Form 35 also. So, if you look at it, on the facts and circumstances of the case, the learned AO erred in invoking the provisions of 147. On the facts and circumstances of the case, the learned AO erred in passing the assessment order under 147, read with 144. This is the second ground. Third ground is the learned AO erred in law and in facts in deciding the assessment ex parte in violation of the principles of natural justice and without granting to the assessee a fair, proper and meaningful opportunity. Therefore, the order passed by AO is illegal, bad in law, ultra virus. Fourth, the learned AO erred in making addition of undisclosed income under 69E. Fifth, the learned, without prejudice to above, in case you do not agree to above 4 grounds, the assessee may be allowed the set-off of short-term capital loss and business loss against the undisclosed income. And finally, the sixth ground, the learned AO erred in making the addition. So this is how the grounds of appeal are to be filed. So what I showed you earlier was the submission which was made. In the submission, you can make a detailed grounds. You can write all the provisions of the Act. But when you are making the statement of facts and the grounds of appeal, you have to just write very, very precisely. You have to write very, very precisely, students, when you are writing the statement of facts. Are we clear? So, in the statement of facts, you just need to write the statements where as it is. What are the statements? And what is done exactly. And then you make the grounds of appeal. Okay? So, this is how the appeal procedure works. So, this is Form 35. Plus, you have to pay the fees. Pay the application fees. And now what is the time limit for making the appeal? The appeal to the CIT or JCIT has to be presented within 30 days. Has to be presented within the 30 days from the date of service of notice of demand in case of assessment or penalty orders. In other cases, it is 30 days from the date of order. So the time limit is 30 days from date of notice of demand or the order. Are we clear? Secondly, the appeal shall not be admitted unless the assessee has filed the return of income and has paid the taxes and has paid the advance taxes in case he has not filed the return, or in case he has filed the return, has paid the entire taxes. So, no appeal shall be admitted unless the assessee has filed the return and paid the taxes, or if he has not filed the return, paid the advance taxes. Fine. So assessee should have filed the return and paid the taxes. In case he has not filed the return, he should have at least paid the advance taxes. Are we getting this particular point? Yes or no, students? Any questions till now? Yes or no, students? So the time limit is 30 days from the date of service of notice of demand under 156. In case of others, it is 30 days from the intimation of the order. Now, appeal can only be admitted only if the taxes on the returned income are entirely paid. Now, if the appeal is filed after 30 days, can the delay be condoned? Yes, the delay can be condoned. The delay can be condoned based on the sufficient reasons. So even if the appeal is filed after the 30-day window, then also the appeal can be admitted based on the sufficient reasons. So you can just write down. Delay can be condoned based on sufficient reasons. Okay. The CIT appeal can condone the delay. Are we clear? Now, what is the procedure in appeal? See, what happens, you will have the notice of demand. Dilip, in case of appeal, whether it is only assessee goes for appeal or department can go? No, department cannot go before the CIT appeal. So it is only the assessee who will go to the CIT appeal against the order of the department. Clear? So is this question also you are answered right? Where the assessee files an appeal, he has to pay the tax to the he has to pay the taxes. So yes, they have to pay the taxes. Now, see, student, when the notice of demand is issued, so assessment order will be passed under 143(3). Notice of demand will be issued under 156. Now, when the notice of demand, students, will be issued under 156. Now, the question arises, what do you do with that demand? Now, you're going to appeal. But the demand can be very high, students, sometimes. So, the income tax officer, you will have to communicate him to the assessing officer. You will have to communicate, students, that we have gone for the assessment. We have gone for the appeal. before the CIT appeal. So kindly grant the stay on the demand. So if you're going for the appeal, you have to make a stay application, stay on demand. What is stay on demand? In case you do not file the application for the stay on demand, ideally you should pay the entire demand. Ideally, you are required to pay the entire demand before you go for the appeal. But in case you request for the stay of demand, then if there are sufficient grounds, the sufficient grounds may be based on the appeal grounds that you have taken. Additionally, based on that you have the financial hardship. So you are not able to pay the demand. So the stay of demand application has to be filed along with the appeal application under Form 35 before the CIT appeal. Additionally, you have to also file the stay application to the assessing officer. In case you fail to do that, students, the assessing officer will start recovery of the demand by attaching your property, by attaching your bank accounts. So it is very necessary that you file the stay application. So you just write it over here. Application for stay of demand to be filed to CIT appeals or JCIT appeals as well as the AIM, as well as to the EU. Okay. Then what are the procedure before the appeal? Let's try and understand what is the procedure under the appeal. So after you submit your Form 35, the statement of facts and grounds of appeal, this JCIT appeal or CIT appeal will fix a date for the hearing. Now it is entirely done again in a faceless manner. Now the appeals are also under the faceless manner. So you can just write it over here. Faceless appeal mechanism. So they will grant you the date of hearing against the appeal which is being made by you. And at that point of time, the JCIT or CIT will, you can also take the adjournment in case you are not happy with the date, you are not available. They will hear your side. You will have to make submissions first. You have to prepare a paper book entirely, preparing the detailed submission, relying on sections, case laws, provisions, whatever you want to. And they will also hear the assessing officer also. Then the CIT appeal or JCIT appeal can make the inquiries as they would like to. They may make the further inquiries, and based on that, they will prepare the appeal order. Are we clear? Now the question arises, can they admit additional grounds of appeals? Let's say, for example, if you have forgotten to take the ground of appeal at the time of filing Form 35. So in that case, can they admit additional grounds of appeal? Yes, they can. So, power of CITA. You can write here the power of CITA is coterminous with that of A. Now, what does this mean? The CITA can do what AO can do. Additionally, the CITA can also do what AO cannot. Now, what does this mean? So, what are the powers of CIT? I'll explain it. Additional grounds of appeal, GOA, can be admitted during the hearing. Okay, additional grounds of appeal may be admitted. Secondly, this JCITA or CIT can confirm the assessment, they can reduce the assessment, or they can enhance the assessment also. They can enhance the assessment or they can entirely cancel the assessment. Are we clear? However, when they will enhance the assessment or they would reduce the refund, they will give the assessee an opportunity of being heard. Secondly, even in case of the penalty orders, they can confirm the penalty or they can enhance the penalty or reduce the penalty or cancel the penalty. Are we clear? Again, they will give the opportunity of being heard to the assessee. Additionally, in case any matter is not considered by the AO, they can consider and decide any matter even if it was not raised by the appellant. Decide any matter. They can decide any matter arising out of the assessment even if not raised by the appellant. See, here we are not using the word assessee. Here onwards, the assessee will become the appellant. From the CIT appeal onwards, the assessee will become the appellant. But ma'am, we are not even yet clear about what you have written. The CITA can do what AO can do, but the CITA can also do what AO cannot do. What do you mean by that, ma'am? I'll explain. So there is something called as, let's say for example, if I have forgotten, let's say the claim of the brought forward losses, or I have forgotten the claim of the set off of the losses. The question arises, student, can I raise this claim before the CIT appeals? Can I raise this claim before the CIT appeal? Can an assessee raise a new claim before the CIT appeal which was not claimed by the assessee in the return of income? So, it has been held by the Supreme Court that the CITA has the powers as that of the AO, has powers coterminous to that of AO. So what powers AO has, CITA also has. But CITA has additional powers which even AO does not have. Meaning CITA can accept the new claim by the assessee even if the assessee has forgotten that claim while filing the return of income. So, ma'am, can the AO not take the additional claims? No. In case you have forgotten to claim any deductions, anything in the return of income, the only option you can claim that is by filing the revised return. If the time limit of revised return has expired, you cannot claim that before the assessing officer by filing a letter. Are you getting that? So CITA has the same powers as that of AO. He can make inquiry. He can call for the documents, he can call for the information, and then he can confirm, reduce, enhance, assessment, whatever he wants to do that. So you can even raise a new claim which you have not done in the return of income. So you can just write down, decide any additional claim raised by the assessee or new claim made by the assessee which was not claimed in the return of income. You can write it over here. The assessee cannot make fresh claim before the AO. He can only do so by filing the revised return. But he can raise the new claim not taken in ROI before the CITA. Now, what is the time limit for deciding the CIT appeals? The time limit is 1 year. The time limit for the CIT appeal is 1 year. Are we clear? The time limit for CIT appeal is going to be 1 year. So the CIT appeal, as far as possible, it is not mandatory time limit. There is no imposition that they have to close the appeal within 1 year. What they say is, they, as far as possible, may hear and decide the appeal within 1 year from the financial year in which appeal is filed. Appeal is filed, but CIT appeal never hears in 1 year. This is directory and not mandatory time. Okay. Yes, students, are we clear about CIT appeal, JCIT appeal? What happens if the CIT appeals permit stay of demand, AO does not permit stay of demand? If the CIT appeal permits stay of demand, you get the stay of demand. Then even if AO does not permit, there is no problem. Yes, if the, let's say for example, see, delete, what happens practically is the case may not come up for hearing anytime before the CIT appeal because there's like a huge pending log before the CIT appeal. That's why they have now created this JCIT appeal also. So it is possible that the AO may reject your stay of demand and it has still not come up for hearing before the CIT. Then the alternate option is that you write an application, you make an application to the PCIT or Principal Chief Commissioner. You make an application to the higher authorities if the AO rejects your stay of demand. You make an alternate submission to the PCIT, and if he also rejects, you can file a writ petition. There's no other remedy. Clear? Is the CIT appeals clear, student? Yes or no? Any question? Now, what happens after the CIT appeal? Then happens the tribunal. Appeal before the ITAT. And then happens the appeal before the ITAT. Now again, which are the orders which are appealable before the ITAT? So first we'll write down about the appealable orders. So similarly, if you see here also we had these are the appealable orders, right? These were the appealable order before the JCIT appeal and the CIT appeal, right? And then this is the procedure and the time limit, right? Now here, which are the appealable orders? Again, the power of the assessing officer to exclude a tonnage tax company from tonnage tax scheme if this particular company is entering into any abusive transaction. So AO has the power to exclude a company from the tonnage tax scheme if it enters into an abusive transaction. Now that order cannot be appealed before CIT. That is the power of the AO. So in case the JCIT rejects the company's application for going to tonnage tax scheme, that can be appealed before CIT. But in case the AO excludes the company from tonnage tax scheme, it has paying as per tonnage tax scheme, but then the AO observed that it is entering into some abusive transaction. So AO is excluding the company from tonnage tax scheme, and therefore that order cannot be appealed before CIT. It can be directly appealed to the ITAT. So AO excluding company from tonnage tax scheme if it enters into or if it abuses the scheme. You can just write like that. Which abuses the scheme. Secondly, the assessment order, which is passed pursuant to the directions of the DRP. So, assessment order or a rectification of that assessment order, which is passed pursuant to directions of DRP. So students, I told you that the DRP order cannot be appealed before CITA. So these are all the AO's order which can be directly appealed to the ITAP. The assessment order where the GAR is invoked. Assessment order where GAR is invoked, or a rectification order of that assessment order, or rectification under section 154 of such assessment order. Secondly, the order of the JCIT appeal or the CIT appeal. So, JCIT appeal order or the CIT appeal order. The order of the JCIT or CIT appeal, whether it is relating to the income or order levying penalty. So see, as I told you, JCIT or CITA has the power as that of AO. So even if the AO has not levied any penalty, the JCITA or the CITA can also levy the additional penalties. So as I said, they can confirm, enhance, reduce or cancel the penalty plus levy the penalty if not levied by AO. Are we clear? So the JCIT or CIT order levying the penalty also can be appealed before the ITAT. Are we clear? Next is the order of the PCCIT or sorry, PCIT, not PCCIT, order of PCIT or the CIT, which is refusing or cancelling the registration of trust. Refusing or cancelling the registration of trust under section 12AA or 12AB. So these orders cannot be appealed before the CIT or under 1023C. These can be directly appealed to the ICAI. These can be directly appealed to the ICAI. Or order of PCIT or CIT. Now this was the JCIT, appeal or CIT appeal order, right? This is for the PCIT or CIT orders. Okay. So order of PCIT or CIT refusing the approval under section 80G. Refusing the approval under section 80G. Then the order of PCIT or CIT or PCCIT or PDGIT under 263. Revision order under section 263. Again, that is passed by the PCIT or CIT. Are we clear? So these are the orders which can be appealed before the ITAT. Now, before the ITAT, how the appeals happen? Let's try and understand. So there are benches which are functioning in the ITAT, and ITAT is functioning in different cities. Right? There are benches functioning of ITAT. In each ITAT, there are different benches. Now, the bench has the accountant member and the judicial member. So just write down here. Procedure. Bench of accountant and the judicial member will decide the case. So there are two members which decide the case. There's a bench of accountant and the judicial member. Right? The case will come to them to decide the case. And then secondly, these judicial and accountant members which are there, the one is basically the IRS officer, and the secondly, the accountant member can be even a chartered accountant as well. Then there is also a single bench where the cases are lesser than rupees 50 lakh. There may be a single bench. Are we clear? So there could be single bench for smaller cases. So ITAT regulates its own procedure. Then there could also be a special bench. There can also be a special bench. Now, what is a special bench? Special bench is basically if the case is, let's say, contradictory decided by two benches, then in that case, the case may be referred to a special bench, which is constituted by the president of the tribunal. So president is basically a retired judge of a high court. or a vice president of ICAI. A judicial member is basically the judge or the IRS officer or an advocate for 10 years. Accountant member can be a chartered accountant, can be any accountant, can again be IRS officer. So this is how the IPAT is formed. So there can be a special bench also in case there is difference of opinion between the benches. So in that case, a special bench may be constituted. So if a bench members differ, the case may be decided based on the majority. And if they are equally divided, they can state the points to the president. And then based on that, he will decide the case. Are we clear? So then there could be a special bench also on difference of opinion. If benches differ. Are we clear? Now, what is the procedure? How do you file the appeal? Again, here the appeal has to be filed in Form 36A. Sorry, in Form 36. So, appeal to be filed in Form 36. Here also you have to mention the statement of facts plus the grounds of appeal. Now, what is the time limit for filing the appeal? The appeal here has to be filed. The time limit is within 60 days from the date on which the order is communicated. So, within 60 days from the date of order. So, once the appeal is filed, now appeal can be filed either by department against the CIT order or by the assessee against the CIT order. The notice will go to the other party. If the appeal is filed by the assessee, the notice will go to the department. If the appeal is filed by department, the notice will go to the assessee. And the other party has to file the memorandum of cross objections. So, notice of appeal will go to other party which has to file memorandum of cross objections within 30 days of notice. So the other party will be intimated that this is the appeal has been filed by either assessee or department, and you can file the memorandum of cross objections in Form 36A. Again, here delay can be condoned by ITAT if the appeal is filed after 60 days or after 30 days memorandum is filed if there is sufficient cause. So, delay in filing appeal or memorandum can be condoned on sufficient cause. On the sufficient cause shown. Plus you have to pay the fees. Again here, what will happen to the demand which has been raised? If your demand is confirmed by the CIT or if it is enhanced by the CIT, then what will happen to that demand? So again, you can make an application to the ITAT, application for stay of demand to ITAT. Now, in this particular case, the ITAT has the power to grant the stay of demand up to 180 days. So, this application will be made to the ITAT for the stay of demand. ITAT can grant stay for 180 days. Can grant the stay of demand up to 180 days, subject to the condition that the assessee will pay at least 20% of the tax, interest, fee, penalty, or will furnish the security of equal amount. This stay can be extended. This stay can be extended if the assessee makes an application to the tribunal that the appeal is not disposed of within 180 days. And the delay in disposing of the appeal is not attributable to assessee. Then the ITAT can extend the stay, but that stay will not exceed 365 days. The maximum stay can be extended for the 365 days. After 365 days also, if the appeal is not decided, then the order of stay shall stand vacated. Ma'am, we are not getting this. Please elaborate. So, let's say for example, I have got the stay. I have got the stay from the ITAT for 180 days. Now, you all are very much aware about how the appeals function in India. Tariq pe tariq, isn't it? Tariq pe tariq, kitni tariq, right? So, if let's say for example, my matter is not coming up for hearing, either due to me or due to the non-availability of the bench members or the adjournments being taken up by the department, and 180 day passes by and still my appeal has not come up for the hearing. So in case I have taken the adjournments, the stay will stand vacated after 180 days. Meaning stay will stand vacated even if the appeal is not decided. The income tax officer can start the recovery of demand. But if the delay is not attributable to the assessee, if the delay is caused by the adjournments taken up by the department, then I will make an application to the ITAT. Please extend the stay for another 180 days, which shall not exceed 365 days. So total stay can be granted only for 1 year. So 180 days plus another 185 days. So basically 365 days if delay is not attributable to assessee. Okay, so extension is given. This is the extension, right? This is the extension given. If delay is not attributable to the assessee, plus the stay will be given, stay shall be granted only when the assessee pays 20% of the tax. Subject to condition, subject to the condition that assessee deposits 20% of tax, interest, penalty, or fees. This is very important condition. If the assessee does not deposit this much amount, stay will not be given. Fine. And even after 365 days, let's say the hearing does not happen. the matter is not decided. What will happen to stay? The law says stay will stand vacated. Stay will stand vacated even if the delay is not attributable to assessee. So even if the adjournments are not taken up by the assessee, then also the stay will stand vacated. Are we getting that? Yes or no? Are we getting that? So in this particular case, the stay will stand vacated. So, in the case of PepsiCo, the appeal was made to the Supreme Court on this point. That the law says that even if the delay is not attributable to assessee after 365 days, the stay will stand vacated. This is discriminatory. This is not correct. This is not correct. So therefore, the Supreme Court in Pepsi Foods has held that after 365 days, stay will be vacated only if the delay is attributable to assessee. Otherwise, the stay will not stand vacated. Okay, so just write down over here. So, since the maximum stay is, this is the maximum stay which is granted, which is 365 days, if the delay is not attributable to the assessee. So here you can write down, the law says after the 365 days, if the stay will stand vacated after the 365 days, the stay will be vacated even if delay is not attributable to the assessee. So, Supreme Court in Pepsi Foods has held that this is discriminatory to the assessee. Supreme Court in Pepsi Food has said that this is discriminatory to assessee. So therefore, stay shall be vacated after the 365 days only if students, delay is attributable to the assessee. So Supreme Court has struck down this particular word even if to only if. So instead of even if, here this should be read as only if. Okay. So after 365 days, the stay will be vacated only if delay is attributable to assessee. So even and not words are struck down by the Supreme Court. Yes or no, students? Is this clear? What happens if SOF that I had shown, in that though the assessee has given response in the income tax portal that the amount deposited in the bank was received from his relative, still the order was passed on him. Shankara, it may so happen that they may be not satisfied with the response and then they can issue the assessment order. So you can raise that ground. Delete for stay of demand to ITAT, whether we have to also file an application to CIT or AO. No, in those cases it is not required. Only you have to intimate that the stay has been stay application has been made to the ITAT. Because in that case, the AO is also arguing. So he has the memorandum of cross objections to be filed. Okay. Is this clear? So in the case of ITAT, the stay can be maximum for 365 days, students. But in case the delay is not attributable to assessee, the stay application will not be vacated. Sorry, not the application, stay will not be vacated. Are we clear? Yes, in the CITA, as we have rightly discussed, that in the case of CITA, the powers of the CITA are coterminous with that of the AO. So that means he can enhance the assessment, he can reduce the assessment, he can annul the assessment, he can confirm the assessment. He can admit the additional grounds of appeal. He can admit the additional claim for deduction, which is not applicable in the case of the assessment. Are we clear? You can also write down for the CIT appeal this case law name. This case law that the SSC cannot make a fresh claim before the AO. This is Supreme Court in Goetz. In the Goetz, India. And additional claim can be made before the CITA. This is Bombay High Court in Prithvi Brokers. The CITA can also take the additional evidence as well, which was not produced before the AO. The CITA can also admit additional evidence as well, not presented before the AO. Now he can raise the additional evidence, he can admit the additional evidence only when the AO has refused to admit, or the assessee was prevented from, or the appellant was prevented from producing the evidence, or the AO passed the order without giving the opportunity to the appellant to produce the evidence. So you can write down as not presented before the AO if you can write down AO has refused to admit or AO passed order without providing opportunity to assessee or the appellant was prevented from producing evidence. Maybe his books of accounts were seized. Okay. So these are the powers of CIT. You can write this additional one. Okay. As far as ITAT is concerned, the ITAT can admit the stay application even after 365 days. ITAT will not vacate the stay application even after 365 days if the delay is not attributable to the assessee. Clear? Yes or no, students? Any questions till now? Now, the ITAT has to pass the order. The ITAT has to pass the order. What is the time limit for passing of the order by the ITAT? So just write down over here. The ITAT has to pass the order within. The ITAT has to pass the order within 4 years from the financial year in which the appeal is filed. So ICAI has to pass the order within 4 years from the financial year in which appeal is filed. Okay. So basically, students, the ICAI also has to pass the order. The time limit is 4 years from the end of the financial year in which appeal is filed. Also understand that the ICAI is the final fact-finding authority. Meaning, if the question relates to the facts, let's say, for example, my facts are that these are the companies which should have been comparable to me. Or let's say, for example, in my facts and circumstances, let's say, for example, I am doing this kind of business and therefore I am eligible for 80 IEA deduction. These are the questions relating to the facts, whether this business is covered under 80 IEA, 80 IB, 35 AD or not. These are the fact specific questions. These cannot travel to the High Court because ICAI, whatever it will decide, that is the final decision. So ICAI is the final fact-finding authority. Students, the ICAI is the final fact-finding authority and the decision shall be binding on the assessee. So the question, the decision of ICAI on the question of fact shall be final and binding. No appeal will lie against that. No appeal will lie against that. Are we clear? Okay. Now, understand one thing. Now, with respect to the ICAI's power, what are the powers of the ICAI? Can ICAI entertain a fresh claim filed before it for the first time? We saw the CIDA can entertain a fresh claim. Can the ICAI also do so? So in Wipro Finance Limited, what happened was that the assessee was in the business of leasing, hire purchase and leasing. It used to buy the machineries and give it on lease to the customers. Now what happened? Assessee had given the options to its customers that, they can fund their purchases through the loans. So basically you can take the purchases on the loan and I will borrow the loan for you. Many of the companies do that. Those who are into the sale of machinery, leasing of machinery, they allow the customers to take these on loan. You go and buy the television also. You go and buy the fridge also. You have the loan options there, right? HDFC से loan करवा लेंगे, Bank of Baroda से loan करवा लेंगे, isn't it? So they have also an option to give it on loan. So what assessee used to do is, the assessee used to take the loan from the foreign company, from a foreign bank, in foreign currency for its customers. Assessee was not using the loan for purchasing the assets. Assessee was using the loan for helping the customers to finance their capital asset, which they are purchasing on lease, which they are taking on lease. So assessee incurred some foreign exchange loss. Now, initially the assessee had capitalized that loss in the return of income. But while the matter reached to the ICAI, with regard, so assessee had divided the expenditure, some part into capital, some part into revenue. But when the matter reached to the ICAI, because the AO had disallowed the revenue claim, AO had disallowed the revenue expenditure of that forex loss, the assessee pleaded for the first time that the entire claim must be treated as revenue expenditure. Now the question was whether the ITAT can raise that claim. Because at the stage of the assessment, the assessee was only contending the portion of the revenue expenditure, whether this should be disallowed or not. But when the matter reached to the tribunal, it said that the entire claim, even the capital expenditure that I have claimed in my return of income, that should also have claimed it as revenue. So please allow me as revenue. The question was whether the assessee can raise a new claim before the ITAT. So the High Court in this particular case, the Supreme Court in Wipro case had held that the new claim cannot be raised before the assessing officer. But the new claim can be raised even before the CITA as well as the ITAT. And since the assessee was not purchasing the fixed assets using these loans, his claim of treating the entire forex loss as revenue expenditure was allowed. Because the assessee was in the business of leasing, he was using these loans for the business of leasing, not for purchasing the fixed assets. So you can write down powers of ITAT. ITAT can entertain fresh claim even if not raised before the AO. This was held by Supreme Court in Wipro Finance Limited. Supreme Court in Wipro Finance Limited. Secondly, ITAT can admit additional grounds of appeal also if they are not raised at the time when Form 36 or 36A was filed. If Form 36 or 36A was filed at that time, it had not raised that particular ground. So ITAT can raise that as well. Can ITAT raise the additional evidence? The ITAT can admit the additional evidence also because it's a final fact-finding authority. But there are difference of opinion on this particular point because if some evidence require detailed examination, they may remit the matter back to the AO. They may remit the matter back to the AO for re-examination. And then again the matter will come up for the appeal. Okay. Or sometimes the ITAT can pass the order confirming the appeal of the CITA. They can delete the appeal of the CITA. They can cancel the order of the CITA. Sometimes the ITAT may remit back the matter to the AO to confirm the quantum of the tax or the quantum of the total income based on some evidence which has not been correctly examined. Are we clear? So basically, ITAT can confirm the order, delete the order, not delete, you can write the cancel the order, or remit the matter back to AO to re-examine. Okay. They can remit the matter back to AO also. Yes or no? They can remit the assessment back. And what the AO will do, again, it will re-examine the case and the matter will again go. The findings will then go to ITAT to decide. In case the ITAT confirms or in case the ITAT makes the alteration, then how the assessment will happen? Then the AO will have to pass the order giving effect to the order of ITAT or giving effect to the order of the CIT. So, after that, AO to pass order giving effect to order of ITAT. Yes or no? Further, the ITAT has, let's say for example, passed the order. In case there is mistake apparent from record, if there is mistake apparent from record, then the order can be rectified by the ITAT, either suo moto or on the application made by the assessee. Are we clear? So the order of the ITAT can be rectified in case there is mistake apparent from record. And in case there is mistake apparent from record, the order has to be rectified. Are we clear? And the time limit is 6 months from the order. The time limit is 6 months. Are we clear? Now, question arises that what kind of orders the ITAT can rectify. So, in one of the case, it was held that ITAT should not review its entire order or reappreciate the entire order. It has to just rectify some mistake which is apparent from record. So the power under 254 is limited to a rectification of mistake and the tribunal has to restrict to that. 254 is not a carte blanche for the tribunal to change its view. What do we understand by carte blanche? The term carte blanche means complete freedom to act. Tribunal does not have a complete freedom under 254 to change its original view. It cannot unsettle a decision it has already given. It cannot reconsider the entire matter and come to a different conclusion. Because that will amount to reappreciation of the correctness of the decision earlier decided, which is not under the scope of 254. So, this order can only be rectified if it's a mistake apparent from record. The ITAT cannot redecide the matter by adopting the new view. You have to write this in examination. Section 254 is not carte blanche. 254 is not a carte blanche for the tribunal to change its view. For tribunal to change its view. This was held by the Bombay High Court in Earnest Exports case. Bombay High Court in Earnest Exports case. Okay, so the power of rectification is to see that no prejudice is caused to the either party based on the mistake apparent from record. So there may be some kind of small mistakes which are there. Are we clear? But where, for example, the tribunal committed a mistake, where it has given some wrong opinion, then that cannot be said to be a mistake apparent from record. It cannot recall its order and rehear the entire matter. Are we clear? So it cannot recall the order and rehear the entire matter. So let's say, for example, if the tribunal has, let's say, for example, already passed the order, and then the assessee raises the objection that, let's say, for example, tribunal has not considered some decision, tribunal has not considered the evidences which are presented by the assessee, it has ignored the decision, it has read the decision wrongly. This is like rehearing the entire matter. These are not inadvertent errors. This will be leading to adopting the different view which has already been taken. So therefore, this is not permissible under 254. Are we clear, students? Yes or no? Any questions, any doubt? So after this ITAT, we will have the appeal to the Supreme Court. Sorry, appeal to the High Court. So appeal to the High Court will only lie on the question of the law. Only when there is a substantial question of law, the appeal will lie to the High Court. Appeal will lie to the High Court. Now that we are going to discuss in the next class. Okay. So in case there are no questions, we can just stop here for today and we'll meet in the next class. Thank you so much. We can close the session.